Good morning, everyone. This is your European Open briefing for Friday, May 5th. My name is Michael Florentiades, and I'm the chief economist at xm.com. And what today's key points are: the euro rallies to a near 6-month high versus the dollar on optimism about a Macron win in France. The dollar-yen pair dropped from 113 on risk-off mood. The commodity dollars under pressure because of, falling commodities, obviously, and some worries about China. And we have ahead the all-important US employment report and speeches by Fed President Janet Yellen, among others, like Fed Vice President Stanley Fischer. More of that later. First of all, let's look at the euro-dollar. So even before the French election takes place, the euro is making a trial run at 110, so we see that it's very close to 110 right now. It's very interesting that the passage of a new Trump health bill yesterday, as well as the relatively hawkish Fed statement on Wednesday, have failed to boost the dollar. And I'm talking about the Trump health bill because maybe its passage is boosting the chances of the Trump reflation trade, that maybe we will get some tax cuts and infrastructure spending if President Trump finds a way to communicate with Congress better and get his legislation approved. Now, back to the French elections. I think what the market is saying, that since Macron is seen winning easily, why wait until Sunday's Asian Open to buy the euro? So maybe people are trying to front run the French election results, and even people from the Le Pen camp are seen as conceding, let's say, defeat. I don't know. So we'll see what happens there. But I think this is the argument that people are using to buy the euro upfront and not wait for the French election. A risky strategy for sure, but this is what a lot of traders are doing right now, it seems. Now, we have dollar-yen, in the yen rising this morning. I think the risk-off mood is supporting the yen. It's interesting, though, that other safe havens like gold, maybe because gold is a commodity, it's not rallying so much. It's around $12.30 an ounce. Now, Chinese shares hit 3-month lows. We also had strong down pressure on commodities, iron ore and oil price and oil falling in price, and these two commodities in particular are making headlines. So you can understand that there is fear across the commodity complex. And it's also interesting to note that the Chinese yuan is under a little bit of pressure. It's trying to test the 690 versus the US dollar, so that will be interesting to watch also. Now, we have to stress at this point that the developed markets are mostly treating these commodity and China jitters as an isolated incident. So they are not so much afraid for global growth or that it has repercussions across the world. Nevertheless, it's an important theme to keep an eye on. The Australian dollar remains under strong pressure. It has been a terrible week for the Aussie, especially since iron ore, one of Australia's key exports, is down again today with significant losses on the Dalian commodity exchange. So this is also, there are also some worries about whether Chinese authorities are going to push for deleveraging, which in turn is going to hit the economy. So just some thoughts on what's going on. Now, it's a new low for the year for the Aussie. We did have the statement of monetary policy, which was pretty much a non-event despite relative optimism by the Reserve Bank of Australia. We didn't get any substantial reaction, I would say, from the Aussie. I think this is perhaps because monetary policy is seen as stable for the next year or so. So I don't think that people are so reactive. I mean, things really have to change, and the RBA give more concrete guidance on what it plans to do before we see the Aussie reacting to RBA intentions. Finally, we are seeing carnage in the oil market as price WTI, the US, has fallen below $45 a barrel. It's now below the price when OPEC was considering its production cut, and it seems that US production is making up for the OPEC and non-OPEC cuts. There is some speculation that traders are selling ahead of the Baker Hughes rig count announcement, so if more rigs go into operation in the US, that's bearish for oil, and maybe they are selling ahead of that. Now, the loonie has dropped to its lowest since February 2016. Back then, I should remind you that oil was again very weak. It was around that time that oil dipped below $30 a barrel briefly. So the loonie really taking it on the chin right now, and is challenging it's very near the 138 level, and I think it's at more or less a 15-month low for the loonie. Looking ahead, the main item today is, of course, is the US employment report. Usually markets are very quiet ahead of the employment report, but we're not seeing this today. We're seeing quite big movements in currencies, commodities, like we talked about. But nevertheless, another source of volatility, the US employment report, 185,000 net new jobs expected. The unemployment rate is expected to rise slightly to 4.6% from 4.5%. The average earnings growth month on month is expected to accelerate to 0.3% from 0.2%. So we'll see how the data measures up to expectations. Canadian employment also out later. And we are going to get a barrage of Fed speakers, Fisher, Williams, Evans, and last but of definitely not least, Janet Yellen herself are going to speak, and also the Baker Hughes rig count for what is happening in the US oil production. That's all from me today. Thank you very much for watching, and have a great day.